You're tuned into the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here. We do strategy. 5 minutes on the clock. Let's get to work.
Yesterday, Meta reported earnings per share of $8.88, beating expectations by over 8%. Microsoft delivered $4.14 per share, 7% above consensus. Tesla posted a 25% earnings surprise. The Magnificent Seven, once again, delivered record profits. And the market's response? The S&P 500 closed virtually unchanged. The Nasdaq rose slightly. Tesla surged in after-hours trading, but by market close, the enthusiasm had evaporated. Investors are not celebrating, they are calculating. And what they are calculating is this: it does not matter how much profit a company generates if the currency those profits are denominated in is collapsing. While analysts were passing revenue guidance and margin expansion, gold shattered $5,300 per ounce. The dollar fell over 2% in 5 days, a steep, violent decline for the world's reserve currency. The Federal Reserve remains under criminal investigation, and the message from the market is clear. Earnings don't matter when the Fed is under indictment, the dollar is in freefall, and gold is screaming that monetary credibility is gone.
This is not a temporary dislocation. This is a structural repricing of risk. For decades, corporate earnings were the North Star of equity valuation. Revenue growth, margin expansion, earnings per share, these were the metrics that moved markets. But that framework assumes a stable monetary system. It assumes the dollar retains its purchasing power. It assumes the Federal Reserve operates independently, free from political interference. Those assumptions are now in question. When the New York Fed conducts a rare rate check on the dollar-yen exchange rate, signaling potential coordinated intervention, it tells you the currency itself is now the variable under stress. When gold breaks record after record, it is not because investors suddenly love shiny metal. It is because they no longer trust the unit of account. Meta can beat earnings by 8%. Microsoft can exceed expectations. Tesla can post a surprise. But if the dollar loses 10% of its value over the next year, those profits are worth 10% less in real terms. The market is not ignoring good earnings, it is discounting them in real time because the denominator, the currency, is no longer stable. Record profits are not a defense against currency collapse, they are a distraction from it. The Magnificent Seven can deliver flawless execution, expand margins, and grow revenue, and it will not matter if the monetary system they operate within is disintegrating. This is the trap. You can win the earnings game and still lose your purchasing power. You can own the best companies in the world and watch your wealth erode in real terms. The market's muted response to yesterday's earnings is not apathy, it is a warning. Investors are not asking, did Meta beat? They are asking, what is a dollar worth? And the answer, increasingly, is less than it was yesterday. The exits are not crowded yet, but they are visible, and the smart money is already moving.
Your actionable moves for this morning are: 1. Rebalance into hard asset proxies immediately. If you are overweight equities with no inflation hedge, you are exposed. Allocate a minimum of 15 to 20% of your portfolio to gold miners, silver, or inflation-protected securities. This is not a speculative trade. This is a defensive reallocation. The market is telling you that currency risk is now the primary risk. Act accordingly. 2. Audit your dollar-denominated exposure. If your wealth is concentrated in US dollar assets, cash, bonds, dollar-denominated equities, you are taking unhedged currency risk. Diversify into foreign currency exposure, commodities, or real assets. The dollar's decline is not a one-week event, it is a trend, and trends compound. 3. Ignore the earnings theatre. Stop chasing quarterly beats. Start watching the Fed, the dollar index, and gold. These are the variables that will determine whether your wealth grows or erodes in real terms. Earnings are noise. Currency stability is signal. Position yourself accordingly.
I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. Disclaimer: this program is for informational and educational purposes only. Economic strategist Vivian Thorne is not a licensed financial advisor. This content is not a substitute for professional financial, investment, or legal advice. Always consult with a qualified professional before making any financial decisions.